Well, good afternoon, everyone. Scott Henderson, shooter. And of course, at the end of our presentation, please do review our disclosures. We're going to go through a couple things today that I see and charts that look pretty decent, cover a couple of those, and some that have some concern. I want to make sure I point those out as well because we clearly have some continued rotation in this market. All right, let's jump right off and start off with the dollar. Now, right now, I have a pretty solid count on a bullish move to the upside in the dollar. The caveat here is that if we have this bullish move in the dollar, it's going to be a significant headwind for the indices. Now look at those red candles that we received and how much of a pump we got from that. Then look at that bullish candle and how much of a dump did we get that. Just imagine that at 103. We might see, an 11, 12, 15% drawdown from that if that does manifest. So this is something we want to keep our eye on moving forward. Now, I want to spend a little time on TLT. I drilled down on it. I'm going to go out to the monthly on this one because we're getting really close. And, I looked at all the different things that I look at on a chart to try and understand where we are level-wise. One thing RSI is telling me is we're not done yet to the downside. So, our current low is 82.77. Our prior historic low is 82.42. So equality to me is right around 81.29. So we break back above the bulk of this wick on this candle, roughly about 84. I'm going to chase it long there regardless. Otherwise, I'm going to wait and see if we can get that 82. At least that and start scaling in from there. That's sort of my thought. Now, if we come and look at this as far as a larger time frame, just squeezing down as far as, trend extension is back up at the 2618 at 132. So once this flips, we're going to head back up through this progression like we have here. And I would suspect that we do get a divergent low here. That's my thought, because we do like to do that. We, tend to get equality, back test a little bit, and break down. That's what the stock likes to, or the 20-year treasuries like to do, heading back up to the upside. But that's sort of my take. I'm going to try and stick it out for 82, but I will jump on board at 84.41. Now I want to go to semis because semis came off quite a little bit from their highs. We saw 150 points in Micron. We saw every bit of 120 points, or excuse me, 80 points on Nvidia. And, pretty much every name in the book, it's really the lowest flush that I've seen in the semiconductors. However, we held support. We held the gap. We just didn't even quite fill the gap. So, it's not bearish at all. So me, unless we break below this 510, then it's just a retrace. However, it becomes a broadening formation and it becomes a leading diagonal for me, which is challenging because they tend to be broad, so we'll have much more euphoria. I'm seeing this in price too. As I'm scalping, I'm seeing this, hey, things are getting busy, but we could put in a top something like this. So we may be coming into a top for semis, which is going to also be bearish equities. Now, this morning, really because of breadth, I put on some 700 puts in the NASDAQ, and obviously it didn't manifest. It didn't do what I wanted to. They kept buying that dip this morning when I thought it would come off this morning. I wanted to start some runners in there. I still want to add, back up around 712, 715. I'll give it a shot again. But I do think that we're going to go into, towards the end of the May, I think we're going to continue the drawdown a little bit further. And, semis are going to be a major player. So let me jump over to some of our names. And by the way, I cut Google today. Next, let me just pull Google up and sort of explain why, because I know somebody will ask. And I cut Google because we broke below the wick of this candle at 381.96. That's the simple reason why I cut it. And the main reason is because even if we just only get, I figure it's either going to give it to me or it's not. In other words, when I say give it to me, it's going to keep going against me, or it's going to do what it should do in backtest, give us like an ABC structure, and then I get a better price somewhere down this gap around 360, which I'm okay with. Riding this from 290, I don't have a problem with it. So I'm thinking because it broke that trend, this uptrend, I was better off taking profits. I almost rolled right into some cash secured puts, but I decided to wait after I drilled down and looked at it because, ultimately, once we broke this trend, now we're looking at that corrective leg, and the most likely place for test, if it's going to fully retest, would be 350. All right, so let's look at Hood. Now, Hood I held because it did not show as much of a breadth deterioration as I saw in coin. That's the reason I cut coin. I I still don't see the liquidity in crypto that I want. I put on that position. It really didn't go anywhere. That news out of the White House, as far as the bill in Congress, et cetera, I see no traction from that. And that's kind of concerning. So I came back and said, okay, I like Hood more so, except for Hive actually popped up this morning on my radar and it hit the flow this morning. So if I add something back up, I may add Hive, or I may go in and add more to Link and XRP. But that's about as far as I'm going to go right now. I'm going to get back to my 1%, and then I'm going to be done for a while. Since I took coin off, I'm not quite there. I'm at like 40% of my 1% at this point. So as we jump further, SEI, again, this is solely based on XAI acquiring this. So it's kind of a lotto, but I'm sticking with it. I see no reason to change. I sold 65 puts. Now, Micron, I have 700 cash secured puts, and I was an absolute idiot yesterday. I should have bought more at 650. I looked at it. This morning I came in and I started seeing the flow come in. It hit the top of the list at the opening range. It continued to build all the way out to noon. And if we jump out and we look at an option strat, Micron right now on 1 million plus contracts, there's 14 of those contracts open. So it's pretty aggressive as far as that looks. So it's building. I mean, we have a few names. I mean, we have SNDK, we have Micron. Then coming into this, the next thing is we have Qs, a few Google, a few Meta, a few Microsoft. Really, there's nobody there as far as the whales are concerned. Outside of those specific semi or chip areas, there was also a rumor that SanDisk is going to have a 10-to-1 split, and potentially Micron will have a 2-to-1 or a 3-to-1 split as well, which would be extremely beneficial because historically with names like Micron, you do very well if you're holding common shares, and all of a sudden you end up with 3 shares because quite often there's a 20 to a 30% increase, and in most cases with these stocks, it's not hard to have 100% gain. So Micron is something, even at this price, I want to continue to build a larger position there. Now looking at Sentinel-1, I mean, just off of those lows, it's just not slowed down. Might get a little resistance up here in this band. I mean, it should go to 50% of that bar, roughly about $20 is my thought. From, at me, I'm just running a 15% trailing stop. That's where I'm at based on my gain. So I would suggest that either use an 8 or a 21 EMA, or you use I'm going to go to not really didn't close it. We need to come back low. So I would leave it at the body of this candle here let me put the label up there, for confirming trend support. So I would use this number right here at the wick, 1680, not the wick, the body of the candle. And then if that line breaks, I'd cut to 50%. Otherwise, I just hold because right now it's working. All right. Now, Link, we came to this a little right at about $8. It's working. I'd rather it held this a little better, but it just tagged the invalidation line that I moved it up to. I'm not cutting it. I'm going to hold it because this is I have really nothing on in crypto. I want something there just in case we get some kind of confirmation on this bill from Washington that's really going to give it a tailwind, because there's a good possibility. Realize we get one piece of news out of that bill and you realize last week we hit the highest dollar level in history of the dollar money in money market. So there's a crap load of money on the sidelines, right? There's a lot of people who are unsure, just like I am and just like you are. So it's not going to take a lot of great news to get some people chomping at the bit, because I know some of you are chomping at the bit. I'm chomping at the bit. I want but it's like, I also know that, sometimes the best thing to do is sit on your hands and wait until you get clarity on where breadth is going to expand. And that's roughly where I'm. All right, let's look at CCJ. It doesn't look, it's done nothing wrong here. It really hasn't. Good spot. I mean, the only thing I don't like is that it took this out. But as long as it doesn't break below 97.79, it has a decent shot back to the upside. What I don't like is that it's confirming with the RSI and MACD is broad. I mean, it's not closing. I'd rather it be closing. A little closing, then I might step my toe in the water. So looking at the count, as far as the wave, it's an impulse. It looks like it's an elongated C to me, just off of this look. So now the only thing with an elongated C, the most likely place is right there at that shelf, because this is broken, right? There's really nothing up here. I mean, when it broke down before it went below there. So the most likely thing we get is an overshoot to this low at 103 or whatever, 113, before we start our next leg up. So I would look for some divergence in RSI right there. And then as soon as that MACD cross clearly turned, like when you see this kind of turn here, I mean, even a turn here, but if you look at your count, that was Flushing Drive 1, Flushing Drive 2. So it was an XABC pattern, which actually played out. This is really Flushing Drive 1, so we want at least a Flushing Drive 2 there. All right, let's look at A-Lab, just a rocket ship. And now, the way I see this, let me look at the count, bring it out so you can see it. I need to go out to the weekly here. Why am I on the daily? I'm wondering why the charts weren't fitting as I'm going through those other charts. Apologize for that. Didn't recognize it. All right, so unless this flag breaks, this is an impulse wave, period. 3 is most likely, over 70% of the time, the longest wave. So now I'm measuring the 1618 off of this shelf. So I'm measuring this trough, this peak, and this trough, right? That is the most likely target. So if we fall short, 373 is short. If we extend, 548 is the kind of extension. So that would mean 3 either does this. 3 either does right here at halfway between the 100 fib and the 1618. If it becomes elongated, it goes to 548. That pretty much are the 3 different outcomes that we see when we have an impulse like this, because clearly there's no broadening in wave 2, so it is not a leading diagonal. So there's really nothing here that suggests that it'll get tight to the upside. This is just a name we hold. Again, I'm going to come back to confirming trend support and suggest that that probably is the best way to manage this. Now, in this situation, since we cleared the top of the body of the last candle, we want to use the base of that prior candle or the wick, your choice, as far as how you want to do it. Me, in this situation, I give the candle a little bit of room there. Let me put the labels up there for you, just so we get a price on that. So 231.73. As far as my second level, your base number would come in. I just use the low at 47.13. Let's look at Rocket Lab. Now, SpaceX is going to get this thing to pop regardless what the tape does. So I would like a pullback to about 105, 110, so I can put something on for that. And I may just put something on before, SpaceX goes public, because we're going to have a number of names that rally, and Rocket Labs is probably going to be one that rallies significantly off of that move. But if we come in, we bring in an impulse wave, which is what this is, again, because we have a high and tight flag on our, sorry, I got the wrong name again, or the wrong tool. So this is our 1, this is our 2. This is probably our 3, our 4, so we're going to put a 5. So the bias is at 1618 at 156. So, this is another name that, I would just hold, thinking about confirming trend support. As far as the way I would look at this, I would come right to the wick on this one. Reason is because we have a red candle, changes the bias a little bit. So that wick, bring in our confirming trend support. So roughly about 99.72. Then, of course, use the base number on that, which is roughly 55.98. ENVX. Now, some of these small cap, and even NVX really isn't a small cap, it's more like a mid cap, but there are some names that are struggling here. Now, remember, I had posted this shallow wave and I thought it would reject it. That's exactly what it's doing. So the question then becomes, are we done with this triangle we've spoke about God knows how many times? We keep running into this resistance, and I'm just for today, I'm going to go here and draw it here. And part of the reason I'm going to draw it there is I want you to see how far out the peak goes, because quite often that's what you have. It keeps consolidating. Look at how tight we are to that support line. Wick to it, right? Bodied to it. So it broke it, all right? That is bearish to me. So in that scenario, I would be looking at this as an equality move. So let's assume it's a 3 dive. Flushing Drive 1, Flushing Drive 2, Flushing Drive 3, right? Come in. So equality would look something like that to me, maybe around 230. For that reason, I don't like the idea of holding it here. And I surely don't want to add here with that until that wick gets taken out. So until it gets back above that, 755 or something, 750, it's just, there's too much of a risk it fails here just because that wick went below it. Because you just don't get a slight overshoot like that. It's typically it's usually one standard deviation. So if you look at your deviation, this is second standard deviation. So that's probably a given, right? It could go to like 510 and then bounce. I mean, it could do that. However, quite often what you get is, we haven't crossed the third standard deviation on the lows. Notice how it blew past it, went past it just a little bit here, went past it here. So I'm looking at the MO on the tape, went past it here. So it likes to flush past that second standard deviation just a little bit. as far as the stock's concerned. So I would think that'd probably be where it goes. All right, looking at UMAC, Unusual Machines. I've got a very broad impulse here, and I'm measuring off of just the breadth that I see as far as 1 and 3 being the longest wave. Now, the most likely places that we come in here, an undershoot would be here, an overshoot would be up here. So that ultimately is the thought there. It's done nothing wrong until it breaks trend support, which is this little line right here from here roughly there. I mean, it tightened up a little bit, so we're one leg up, and it'll probably hold this, from this point upwards. So, ultimately you could come in and say, hey, it breaks below that, at this point, 1251. Then your opinion might change a little bit. We clearly have run into resistance. However, this to me, from this low to here, is mound 1. This is mound 2 with divergence building in 2, which usually implies more of a flat. So, that puts a little dirty laundry in whether it extends to 1618. I would say that we definitely have a pushback to 23. Just because we're squeezing on the RSI, it implies to me that we're in the end of our range as far as buyers willing to pay a higher price. However, once it breaks above this 2344, that's when we get a push up to the 2618. It has the capability of pushing it, but it needs breadth expanding in the market, which makes it very challenging because we're not expanding, we're declining. I mean, right now. And until that returns, the pumps are going to be less, they hold less, they're going to be not as extensive, and there's going to be a lot fewer of them. Just like when we go and look at the breadth or the option strat, we look at where the money's going. Well, we're down to 3 names this morning on our million plus when I ran that at 945. That's just way too thin. There's just no money going into it. So how is the stock going to pump if there's no flow there at the moment? So now TE, I've got our 1 as sort of like a stop run right here. The reason is I'm looking at this line right here. Looking at this confluence right all across here. It's a good spot for it to reject. So it'll overshoot it and then we'll get a reject, I would think. However, this is a very extended, and the question is this peaking drive 1? This will be peaking drive 2, and then we get a peaking drive 3 way the heck up here? Good. It could. Because there's really no, even if you come back and look at this leg here, peaking drive 1, peaking drive 2, peaking drive 3, they're pretty clean. There's nothing here in this body of this candle that implies we're done at all. We have a rocket ship RSI. Now notice our last rocket ship in RSI, how we built out here, how much shallower that. We go back even further in the tape. We didn't really have a rocket ship in RSI, but it built out this. It does like these large green candles. What concerns me, though, is that it also likes to reject on those large candles. We got 1, 3, 4. I'd call that a 5. This isn't as bold. 6. So, the bias is that we get that last little push. I mean, it could be done now. Then it's liable to reject. So just manage your position size, and I would take profits into that. Or flip to, hey, I'm taking my common shares off. I'm going to go do a certain number of calls right at the money at $9, run 6-10 weeks out, something like that, and just hold a couple pieces so you can get the upside if it continues. But it's a pretty solid name. Mound structure is really pretty clean. I mean, it built from back over here, so this is mound 1. Let me just draw that for a second because that looks like a pretty picture. So, mound 1 really built from here. However, RSI divergence was here. We did the overshoot right here. I'm going to measure from this point to our low. This is a very aggressive mound 1. Now, quite often what you can do is mound 2 typically is broader than that and deeper than that. So, quite often you can extend it by about, break it down into 4s, 20%, 25%. However, the slope should elevate, and we probably should do something like that around 11. So if we push up to that $15, the likelihood is that we're going to come back to about 11. However, if it fully extends, then the likelihood is we're not going to come back and retest $13 roughly as far as how that mound structure would build out. All right, now coin. The main reason I pulled coin was simply because the breadth was not expanding. I mean, was not seeing we saw the orders come in off of the congressional vote, and it just didn't hold. So, at that point, I didn't see, when I'm scalping, and I have a set time frame that I scalp every single morning. Opening range is something that is very significant to my bias because I can see the follow through that we get, or I can see it fail. And just like this morning when I went short, they totally rejected lower prices right at the open. And there's a specific time frame where that happens. If that happens, happens, we have a good idea whether we're going to have follow through to the bull side or we're going to have follow through to the bear side. Then we step out and look at our weekly close, and it'll give us a bias pretty much on which direction we should follow through with based on those flows. So until we see that money going back into coin, it's going to be the same thing with crypto. I just don't think the liquidity is going there for whatever reason. And I'm not seeing why. And I keep going back and looking at it. And I have no clarity there on, whether we're going to see all-time highs again. What it looks to me is actually like a stock that's hit its peak, and now we're doing that extended period of digestion, which sometimes can happen for years. So I don't really want to chase that. I would rather chase something like what we just did with Google, or just that we did with Sentinel One, as an example, because those, they'll bring in more revenues than just sitting in crypto at this point. However, I could be totally wrong, but that's just my 2 cents. I'll look at Amazon as soon as I finish going through this, Aditi. All right, looking at Riley. 50% back was what I noted. We pretty much are in that box. However, I think this is going to extend up out of this. If you look at the way this wave, was a little deeper on the retrace than I initially noted, but that's not necessarily a bad thing either, because that gives a little more euphoria, which is a good thing. So, looking at where our fibs are, our 3 probably extends to this 1618, $17. It's a good candidate, especially with what's going on with autos. Because right now, new auto sales are done. Stellientos, or whatever, however you pronounce it, they are actually exiting the U.S. market. They are significant in the number of new car dealerships that they own. They're now winding it down. They've decided that it's no longer going to be a profitable market for them. So there are going to be fewer choices for C buyers in autos, because Stellientos buys, pretty much was one of the major lenders that financed subprime auto loan. And I'm not that close to that to know who else is in that market, but that's a big enough player where I think it's pulling back. And whenever that happens, obviously, something like Riley does well simply because of the products that it specializes in. But I think that maybe around 1440, we hit some resistance just because of this shelf. Get a little reject. That would be a good spot for us to put it in an ABC, and then we continue up to the upside. All right, Creta, nice flag, nice wick off this low. That's solid as far as the bulls are concerned. As long as we don't take out the base of the shelf, I put it way the heck down here, though. If it takes out this ledge at 129, the reality is you could push it right up here to this wick at 169. If you wanted to, but there's no reason you can't give this one room with how strong it looks to the upside. I would say it pulls back. 1618 is viable. Maybe not this year, but surely first, second quarter next year, I would think. Now, silver looks to me in a little bit of trouble. Now that the supply disruption is not something that is reflected in price unless the buyers and sellers see it and there's enough news on it. And there really is no news on the scarcity of metals that's going on right now from the Straits of Hormuz. Nothing. When I've done the scans looking for it, I can't see anything. Because when I track sentiment in a number of ways from Google and Amazon as well as that. And I'm not seeing where the consumer retail investor is seeing that we're going to actually run out of certain commodities at some point in the near future. Silver is one of them, especially with mines shut down and China having a blockade or whatever, or an export ban on silver. At some point, it's going to hit the markets and it's going to pop. So I'm not going to say don't hold silver. However, it breaks below 60.93 on SLV, then I would probably trim or flip to cash secured puts, which really you could even do now. If you're holding common shares, you could even look at leaps on this and do, 75, 70. I wouldn't go down to 72 because they'll cost too much. But you could do January leaps on this 75, and they probably will hold up well for it because we've already had that major pullback from the high. Realize this is just the follow through. Now, is this ABC potentially done? Yeah, because this is an elongated one, or excuse me. We got not a shallow, but what I would classify as a normal B, and then a shallow C. So that happens quite often on a retrace when there's a market switch, where you get this whoosh pluck, and then you get the dip buyers that come in, and then they sell, and then the market continues lower and puts in its final low, and it happens to be right at a shelf. I mean, just a perfect spot for it to hold. So it's done nothing wrong. If I come in here and I draw an impulse wave off of this low, and let's just say this is our 1, this is our 2, let's just say that's our 3. And we probably come in and put in another number, at least 84 on the downside. I mean, on the low side, if it's a dead cat bounce. So let's jump to NLR. Unfortunately, this is broke, the wedge, and the most likely place for it to go is right back to the shelf at 111. That's my 2 cents. Sorry to say it. Hopefully you don't own it, or hopefully you own it from like whatever it was at $100. Then it's not a problem. All right, let's look at SMR. And, some of this is a dynamic that I'm not identifying. Maybe I'm just not seeing it. But there are certain of these power drivers that just aren't moving. I don't know if it's the supply disruption to the materials they need to grow and expand, which it could very well be, because I'm not that kind of technical guy when it comes down to utility companies, etc. I've never spent a lot of time on, hey, can I get this copper wire? I don't know. Probably not. It's probably going to be limited. That could be weighing on all of these names right at the moment. So that becomes a challenge. So equality to me, now this extended from our low here. Once that broke, it opened up a shot at equality. If we were only measuring, that was our final low. Then we would be looking at, maybe a push down to 796 versus now it's deeper. Since that continued, we continued to push lower. The most likely spot for it to stop is at 671. Equality puts us down at this lower band at 352, 379 range. So it's got some decent downside. All right, so looking at DBX. Now I think we've topped here a little bit. When I posted this, I don't know, maybe a month, 2 months ago, maybe, I don't remember. Same time I put an article out for this as what's on my radar, and Zscaler, I think, was at the same time. So, equality to me is we get up to maybe about this $30 and we rejected a little lower. However, it does look flaggy. So, I'm viewing this as an ending diagonal, saying this is our 4. And we probably do continue with a 5 to about $30, which would make sense. I mean, it could reject right here. Not a lot of wicks up here. There are wicks on these candles. So ultimately, what you had was somebody big chasing this. One thing I don't like about this name is once it gets to that second standard deviation, look at where that second standard deviation is. It likes to reject there, and that's right where we are. So the plus side to the Bollinger Bands that we're looking at here is we did have a second standard deviation cross with a potential, not quite a third standard deviation push. So we had some decent exhaustion down here. Then on this candle, we had a confirming low, not confirmed, because that was our confirmed low. And then we have a divergent low that was followed in RSI structurally, and MAC cross. So this is, in my opinion, this is mound 1 we're building. We got a mound 2 and a mound 3 that'll come out. So this actually could take out the highs as well. So that's one reason I wanted to cover it. Let me jump over and do Amazon now. I was actually disappointed Microsoft didn't hold its number. Nice flag, good spot. Right at our 3. The problem is that breadth, the downside, we've already wicked below it. That body gets below that 2, let's just call the body of that prior candle. Right here at roughly 255, I'd be trimming. When did you own that from, Aditi? 200? Oh, good spot. Covered calls would be a good candidate selling just above that wick 280s if that was viable for you. All right, well, I think I've covered everything on the list. Does anyone else have any other requests? Apple and ONDS. I knew there must be some coming. No reason to trim. Confirming trend support would be what I would use, simply because you have this huge trend running. It's consistent. Shallow trend, by the way, still. And what I mean by shallow is notice how once we got out of this flat, we got a flat here, broader, deeper, which you have as we escalate. So you'll get a really tight base consolidation zone in mound 1. Mound 2 starts off and you have broader. In other words, what I'm saying is the low and the high are much further apart. And quite often is that second June roll probably too soon, unless you don't want to yet. It probably extends substantially from here, just where it's at, because just coming in and throwing, have you guys figured out I don't get distracted? Well, not that you distracted me. It's that I get lost in my thinking. All right, mound 1 looks like this. Mound 2 will come in. It's actually a decent look right here. I'd love a pullback, not for your trade. A pullback and breadth. I'm just going to leave that the same. This is the structure that look longer term. And when I look, I pointed out a chart. I'm not recalling at least which publication I put it in, but I put a chart with all of the 20, 50, 100-day, 200-day, 250-day moving averages on there. And I was expressing about how broad and open our current price is. And, Apple is one of those names that clearly expresses that we have significant upside. I mean, this stock could literally go up $150 from where we are now. So looking at confirming trend support, our body was not above it. So I would use the wick of the prior candle, or excuse me, the body of the prior candle here as far as my number. Let me come in and give you a label. I would just run 279.65 is my top number for confirming trend support, and 245.51. You're going to want to plan to roll those 310s though. I don't know that I would go much above 310 though. You're going to pay to roll them. So you want to look at that and how you're doing it. Maybe sell some deeper cash secured puts to fund those. I mean, you could sell 275s to fund that roll if you wanted to. I mean, I don't know if you have room or you even do that, but that might be a smart move. ONDS. I'm still surprised that drones haven't gotten a bid here. However, scaling in at 9, 8, and 7 with an average of 8 still was probably the just looking at how we stuck flat here. It's a whole. There were a couple, and I didn't know them. I read an article on, Trump's been buying a lot of stocks. He, just bought Intel and AMD, and there were 2 or 3 technology companies in drones. And I'll have to go back and find. I saved the article so I can go find it. I just haven't had time to get. But there were like specific surveillance drones that he put some money into, and it wasn't ONDS wasn't on that list. Now ONDS is big in that consortium, and what that consortium is where all the autonomous drone people are working together to develop the goals for the Defense Department. So I don't know exactly how that's going to wash, and ONDS has had some decent contracts that have come across where some of the other names have not. So I think it's just a matter of we get the news that, hey, this government just got a decent order, and then we're going to get our peaking drive 3. You got our 1 here, you got our 2, and our 3 is right up here around $20. So I think in this market, this condition, as long as it doesn't break below the body of this candle right here, that's where I would lose some conviction. I don't like it not being clean, by the way. But and what I mean by clean is there's a lot of noise here. So I don't have this confluence line right here. So I would rather it be like this, where that price held versus not. So there's a lot of noise there. We have a wick broke below there. So that's still noisy. We're wicking on both sides here. So buyers or sellers are not in control. So just manage your position size, but I do like it to the upside. All right, let's look at Irene. I looked at that one, I don't know, maybe it was 2 days ago. Clean 1, broadening on 4. So it's an ending diagonal. Not good news. And it's not horrible news either. It just means the most likely outcome is we get like a flat. So it gets a little bit above this high, hits 72, and then we get a reject. Then we get an ABC, and then the next leg will build. Quite often, ending diagonals happen in wave 1, okay, which is good because then you pretty much know what your outcome is once it completes. But it's challenging trading options because quite often the premium decays so quickly in those that it's hard to hold. So once we get back up to the 618 and get the back test to, roughly $61, $8 lower, it would be a good spot to enter. Even here's a decent spot to enter if you want to put on a nice wick off. I mean, I would say, looking at the MACD RSI, the only thing I don't like is we've got like a confirming 1, peaking drive 1, peaking drive 2, peaking drive 3. So it could win. I mean, the challenging part about ending diagonals is they can do this. They can come in like this. They never take out the prior. So that's the reason I don't chase, because it's this, and it's not like 30% or 20, it's probably 11 to 8%, whatever it is. But it's enough where I have better results shopping for specific setups versus that taking it. So I would not add here, me personally. Doesn't mean you can't if you want a piece on it, because I do like the name as well. CoreWeave. Now, who was that? Nvidia just put a big dollar into those guys. That was a decent number. Looking at, I'm going to come out to the daily. MACD needs to roll to the upside. ABC is not on the corrective leg, is not equal yet. So it's not equality. So, maybe right here, back at this shelf would be a better spot. However, it's not excited. So 87, I like it better for a shot long. I really like it back at 71, but I don't know that it's going to give us. The only, we are confirming on the downside. I'd rather have divergence there, and the MACD isn't crossed. So my preference would be maybe I start sticking my toe in the water. It's 87. I think I have an 85 alert on it. QS Quantum Scope. Nice base, 655 or 675. Anyway, sorry, my OCD is not going to let that number be off. I have to have it to the penny. So golden box, the most likely target is going to be between that 618, 875 and that 32 right there. So that would be my bias to where it goes from here. And right now it's just building that base to get that launching pad out of there. So it is going to come out and go to $9. Not a huge move. RSI is kind of confirming. MACD is already crossed. So you get any flush below here. Wick, viable. I'd rather have it at the second standard deviation though. But considering how we're skirting this, the only thing is it did not hold that trend support off of this low right here. Oh, no, actually it did hold. Sorry, I was incorrect. Went right down to that, as long as it doesn't break below there. However, like I've always said, you can have an overshoot on 3. Happens more than half the time. So the main thing I'd want is some more divergence, I think, to jump into that in this market. EOS. Is it a fund or her stock? David, you there? EOS? Did you mean EOS? That's a good thing, Robert. I think, yes, EOS. Or is it EOSE? Or is it a ETF, David? All right, I'll do EOS. That was funny. You gave me a good chuckle this morning, David. All right, so this is our really an ending diagonal, which that wick just absolutely nailed me. I went long here off of that right there. Actually, it wasn't that bad. I think I had 13 contracts, 14 contracts, something like that. But very few things for me expire worthless, at least anymore. So this to me is an ending diagonal. So it's a good spot to head back up to about $10. You know where your stop is pretty clean on this, if that was the name you wanted me to look at. Cleanly, it breaks below 607. And let me go just to make sure I cover it, EOS. And just shoot me a message in chat too, David. I'll work it up for you if we're at the wrong one. So it's Eaton Vance Equity Income Fund. Never looked at it. Nice look though. Clean mound 1. Second standard deviations. Got a squeeze look to it in the MA or the Bollinger Bands. Notice, see how that squeezing is there? That very often reject. When you reject and it's sloping down, see how it's sloping down? Then it broadens. However, when it's squeezing to the upside, it usually expands. So just dropping up some fibs on that, if this is named, actually the name looks pretty good. So what, maybe $24 from here? I mean, it doesn't have a huge upside, but as far as the fund, hey, doesn't look bad where we're at. We're putting in that, obviously RSI is skirting. MACD is rolling back. You get one more dip. So, maybe I'd like it better just as I'm looking at the, so this is Flushing Drive 1, Flushing Drive 2, right? So equality would get us somewhere around 2172. That is the optimal end. All right. Well, anyone have any other questions? Going once, going twice. All right. It was fun, guys. You guys have a great week. Enjoy your Memorial Day weekend. I'm going to be cutting out. I might be here till 10 or 11 on Friday, but then I'll cut out and be back Tuesday. But I'll have everything scheduled to come out probably on Sunday night. I'll get it all done Friday. So you guys have stuff to read over the weekend if you wanted to. I'll leave that up to you. Outside of that, be well. Until next time. Yes.